Hi, I'm Dave Getz from West USA Realty, and this is Richelle. I'll let you introduce yourself and where you're from.
Yeah, so my name is Richelle Hopkins, and I'm a HECM specialist with Mutual of Omaha Mortgage.
Okay, and we just got through making a previous video about HECM loans. Can you tell them what HECM stands for, HECM, what it stands for?
Yeah, so HECM stands for Home Equity Conversion Mortgage. The ability to use a HECM loan to purchase a home rolled out in 2009. In order to qualify, at least one buyer must be 62 years or older, and they're never required to make a mortgage payment for as long as they live in the home. And it only requires a one-time down payment of about only 50%.
Okay, and if you stick around to the end of this video, we'll have a link to where you can go see the previous video and get the HECM loans completely explained, or pretty thoroughly anyway. Yeah. In the previous video, I mentioned that you can actually make money by having a HECM loan. And so we're going to talk about that in this video. One concern a lot of people have is that if they go with this type of a loan, their heirs are not going to have any equity. So if people want to, they can actually make a payment on their HECM loan. Tell us how that works and how you actually end up making money by doing that.
Yes, Dave. So although we don't require these buyers to make a monthly mortgage payment, again, still paying taxes, insurance, and HOA, but we don't require a monthly mortgage payment. They can still make a payment at any time or pay it off without a prepayment penalty. For an example, let's say that I have a client that says, you know what, Richelle, I have the ability, I want to still make a $1,000 a month payment. Now again, we don't require them to do that, nor do we tell them how much to pay, but voluntarily they can make this payment. What's really nice, Dave, is when they make this payment, it will pay the balance down after interest, but it will open up a line of credit on dollar for dollar on that payment. So again, let's say they make a $1,000 a month payment, and let's say of that payment, 600 of that goes towards principal after interest, so it'll pay that mortgage down a bit, but their line of credit is going to open up dollar for dollar. So when they make that $1,000 a month payment, they now have a line of credit by a $1,000 increase. The following month, another $1,000. But here's where they make money on that. Is that line of credit that they've poured into $1,000 after $1,000, it doesn't just sit dollar for dollar, it will grow. Mm-hmm. So it'll grow in availability. So it will grow at whatever the current interest rate is. Today, that rate is about 3.5%. So as they make $1,000 a month payment, that line of credit will now increase by $1,000, and it will grow at 3.5% annually.
Okay, all right. And can they pass on that extra money to their heirs?
Well, if they're living, if they're living in the home and they want to pull it out and divide it up how they want to amongst their heirs. But as a reminder, a HECM is only available and active for as long as one of those homeowners live in the home. Yeah. So once the last homeowner is no longer in the home for whatever reason, usually upon death, whatever is left in that line of credit is not going to get passed on to their heirs. But if they want to pull all of that money out with growth, while they're still living and divide it up to their heirs, they absolutely could.
Okay, all right. So there you go. That's how you can actually make money off of a loan while you're making the payments.
It's pretty cool. Thank you, Dave, so much for having me.
All right, and then remember, we got a link down here, and you can go check out the previous video that tells you more about the HECM loan itself. Okay, thanks a lot. Bye.